Hello traders, hello traders. Today is the 3rd of July 2011, and a happy weekend to you all. We are looking at the Australian dollar, the Canadian dollar currency pair. Okay, the Australian dollar, Canadian dollar currency pair. This currency pair is in an overbought zone. It does not mean that we just go and sell because the price is in the overbought zone. Okay, we will use the TSCW24 or the TSCWSY08 or the TSCWSY008 trading system, okay, to cream the market consistently. Okay, so this is the yearly chart of the Australian dollar Canadian dollar currency pair. As you can see, 2009 the price was bullish, 2010 bullish, and this year bullish, and then push back down. We are in the overbought zone. Okay, when a price is in overbought zone, the strategy that traders should use, okay, if you are so desperate, if you want to be, okay, the most courageous buyer, okay, and you want to buy in overbought zone, please do me a favor, allow the price to cross above the overbought zone and retest the overbought zone before putting your money on the line. Okay, for those of you who are new to us, we are the TSTW, okay, 24 traders. Our website is www.stochastic-macd.com. For all trade, we must adhere to the 5% money management rule and apply stop loss in all trade. Very, very important. Okay, our eyes must be on the price, even though we are using indicator. So the price, the number one indicator, we will keep our eyes on the ball. Okay, the ball is the price. Okay, we will confirm, okay, what the price itself has revealed to us with the indicator. Okay, so what we need to do now, do we say that the price in overbought zone? Okay, if you are, like I said, you are so desperate, you are so bullish, you want to buy in overbought zone, the strategy one must use is to allow the price to cross above the overbought zone and retest the overbought zone before, okay, taking any position. That's the best strategy. Okay, it does not mean that because the price in overbought zone, the price will definitely turn around and come back down. Okay, we will wait until the market itself accept this zone as overbought, and we see, okay, a distribution taking place in overbought zone. We want to go quickly to the weekly chart regarding this Australian dollar, the Australian dollar, Canadian dollar currency pair. We want to look quickly on the weekly chart. A weekly chart is an excellent time frame. Like I told you before, it's a very excellent time frame. I don't want to say too much about this time frame, but all I can say to you, the weekly time frame is an excellent time frame. Okay, we can see that the price went down first and then displayed double bottom pattern on the weekly chart. The double bottom pattern on the weekly chart is a consolidation pattern, okay, because we say on the weekly chart. If you see on the daily chart, you will know what I'm talking about. Okay, and now the price went up from here, this level here, all the way up here, and then retraced back down to the 50% Fibonacci retracement level and turn around. This is very bullish. Anytime the price turn around and give a bullish signal at 50% at Fibonacci retracement level, that's usually very, very bullish. It's like a good buy. Okay, it's just going up. Okay, same thing when the price going down and retrace up to the 50% and turn around and declare another continuation pattern or give us another, that's again another good buy to the downside, going down, 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 down. The 50% Fibonacci retracement level is a very powerful, a critical price level, okay? And not critical in the proper sense of the word critical, but it's a very important, okay, a Fibonacci, okay? It's not a Fibonacci level, the 50%, but people are using the 50% as a Fibonacci level, but originally it's not a Fibonacci level, but the 50% level, as I told you, is a very important level. Okay, because traders pay attention to that level, especially those who are using the gun. Okay, not a gun to shoot people, but a gun trading tools. Okay. All right. So we see that the price went up from here up to this level here. This level here. We'll call it A, B. Okay, C, D. This is the ABCD chart pattern. Okay. So In theory, the ABCD pattern, the distance from A, which is right here, to B, right here, okay, in theory should be equal to the distance from C, okay, to D. We are in the D zone. This is the overbought zone according to the pattern of A, B, C, D. We are in overbought zone. We cannot deny it. We just know that we are in overbought zone according to the pattern of A, B, C, D. Price went up, retraced back to the 50%, and went up again the same distance almost. In theory, this one is almost the same distance. I like from here, okay, this distance from here to here, we have achieved the same target up to here. The market does not forget, okay, the activity of the price. They know how much they earn from here to here. They didn't forget. As soon as the price come back to that level again, people are willing to take some profit. Does it mean that the price will definitely turn around? This is the problem with traders watching video on YouTube. Myself, I did it on the past. You watch a video on YouTube and you go and place a trade and only to see something funny happening. Okay, that's not the best way to do it. Is to learn to do it properly, understanding the language of the price itself, the number one indicator, not to cut corners. Okay, very. It's a serious business, and if you are doing it, be serious, okay, and do it properly. That's what we say. Do it properly. Don't cut corners, and take full responsibility for your own decision, your own choices. The time you enter the trade, the time you close the trade, take it serious from the beginning. Okay, so we are in overbought, so that's all we know. Or what do we do now? We just wait for a signal in that area. If we receive a clear-cut sell signal on the third best time frame, second best time frame, we will take it by all means, because we know that we are in an overbought zone. Any gorgeous, beautiful, okay, a sell signal in that zone, we will take it according to the A, a B, a C, a D, a chart pattern. The ABCD chart pattern is a bit of a psychological price pattern, because the price went up from A to B, okay, and retraced back to the 50%. Very often you will see either 38% or 50%, okay, and the price resume again. The trend is a continuation pattern, because the trend line is broken here. I said to you, you draw your trend line, you see. See how the price break the trend line and retest it with this 2 weeks candle here, this session here. You see, the price just retest it, and then boom, it went up. When the price went up again, we'll draw another line. The importance of drawing the lines, okay? You see this level here, the price came back, went above it, retest it, went up, retest it, dip below it, pop back above it, because what is happening right here, you can understand, this is the end of the year, okay? 2010 was ending here. Traders were taking profit. They did the same thing in 2010, as they did the same thing in 2009, as you can see here. End of the year, people took profit here, you see. People did take profit at the end of the year, because the whole year was bullish. Come November, people start taking profit. They are not stupid. These are smart traders. They don't want to carry over their profit to the next year. They take some profit beginning of November. The same thing again in 2010. The price was going up. Come November again, people took profit. And those who failed to take, exactly the same thing happened here. Those who failed to take profit in November, the next time they see that price pop up a bit, they took their profit again, causing the price to go down further. The same thing happened here. These are smart traders. They don't hesitate to take profit. They take their first, apology for the noise, they take their first profit, okay? Those who failed to take it there, the price went up a bit, they decided to take profit. The latecomer also take their last profit before everybody's happy, okay? Because if you have a profitable trade, you don't want to see it turn around to negative trade, okay? You want it to remain positive, and if the price went against you for a while and return back to your direction, you will take some profit by all means. This is just a psychological game here. And then now we are at this level here. Now what do we talk about? We say that we do not trade only the technical, we are trading the fundamental and the news. The news and the leaders are the heart of the matter of the trading triangle. Any news can change this, okay? How? If gold starts going up, if you have some bad news regarding the dollar, if you have a lot of bad news regarding the US economy, this thing will continue to go up. You can continue to go up, no denial about it, okay? So don't just think that it will go down. Yes, it will go down. It does not have to. Just the news can change it. A market leader can change the direction of this movement. That's what we are talking about, the heart of the matter of, okay, trading is the leaders in the news. And the fundamental, okay, talking about the Australian dollar, if there is Australia economy start creating some excellent job, excellent data coming out, or interest rate being put up, the Australian dollar will just carry on going up. So this is the problem with those who are trading forex. And if you fall asleep as you are trading, okay, you can just be surprised the market is changing constantly, and you remain in one place hanging on to your belief or to your choices, because the market is always changing. So we must be alert, okay, keep our eyes wide open on the ball, okay, see what's going on. It's like you're playing rugby game. You don't close your eyes when you're playing rugby, eyes wide open on the ball. You see how people play rugby or the American football, you watch the ball, your attention, all players, the attention is on the ball, and the ball is right here is the prize, okay. So we are at the end of the ABCD pattern, okay, and we are in overbought zone. If you are so desperate, like I'm saying from the beginning of this video, you are so desperate, you courageous bullish trader, and you are just want to buy, or you can't sell, okay, or you always like to buy, okay, please do us a favor. If you are so desperate to buy, okay, we're going to draw a line here for you. In the best scenario, unless you are day trading, which you can play with, okay, but if you want to swing trade, do me a favor, allow the price to go above this line here, okay, and to retest it and turn around, okay, break above it, retest it and turn around before being so bullish. Right now the price is consolidating on this weekly chart, as you can see on this line here, because we are in overbought zone. Anything can change the direction of this slippery currency pair, okay, the Australian dollar, Canadian dollar currency pair. Thank you for watching, and we will speak to you very soon. We are the TSTW 24 traders.